So I just got off a call with a prospective client and we had a good discussion, and it was surrounding what type of securities you should own to have US exposure. And he was getting confused about the different types of securities that are tied to the S&P 500, which is the largest US index. And what was unique is it can be confusing because although it's these different ETFs were tied to the same index, they provided different returns. So I thought while I was making my coffee in the morning, I would talk to you guys about the difference between owning it in US dollars, owning it in Canadian dollars, tied back to the US currency, and then owning it with a Canadian dollar hedge. So the most common S&P 500 ETF is the Spider Note, or also known as SPY. It is in US dollars and is bought on US exchanges. So what that means is, as a Canadian investor, if you own this inside your accounts, two things that you have to consider. Because it's a US security, you will not be entitled to the Canadian dividend tax credit. However, you will also own it in US dollars, which means inside RSPs and inside registered accounts such as TFSAs, liras, etc., you have to convert it from US currency to Canada in order to purchase a security, and there are usually costs there. Now, conversely, if you were to own it in Canada, which is, so BMO ETFs have ZSP, which is the exact same underlying index, so the S&P 500, but you own it in Canadian dollars, but it's tied to it in its US currency. So what that means is it converts back to Canadian currency on a daily basis. Now, why would anyone want to do that? First, because it's a Canadian investment, you would be entitled to the dividend tax credits in Canada, and that is contrary to the SPY version. Also, you would still have that US currency exposure. So for an example, we owned SPY or ZSP for many clients throughout from 2013 up till about 2015, late 15, 16, because we wanted the currency exposure from the Canadian dollar being almost at par or above par at that point to where it sits today, which is around that 70-cent mark. So you're also going to capitalize not only the return on the S&P 500, but also on that currency appreciation. And now, as a comparison, since that point in time, we've wanted to step into the Canadian hedged version of the S&P 500, which is provided by iShares or BlackRock, and that is XSP. Now, the reason why XSP is important as a consideration compared to the other securities is that the Canadian dollar, since late 2015, has actually appreciated. And up until recently, with the coronavirus pandemic, has held fairly strong. And it has actually outperformed the other US currency counterparts. And so that is why you have to take into consideration what type of currency risk or opportunity you wish to take when considering which ETF to take. What's unique in Canada is because US dollars are always the safe haven currency, or the global currency, so to speak, when markets become volatile, we can often take advantage of that scenario and hedge risks during that volatility. But that comes at a cost where when the Canadian dollar appreciates, you will actually lose money or lose the opportunity cost of upside of the underlying indexes because that Canadian dollar appreciates against its US counterpart. So hopefully that helps investors distinguish when you should own a US version ETF of the S&P 500, a Canadian version tied to US dollars, or a Canadian hedge version of the S&P 500.